My first question is, across Europe now, residential build to rent and private rented sector is a very big trend. Portugal and Spain are not known as being with huge markets for rental market. How this pandemic might have changed things, as people realized they probably need new homes and different homes, and they can prefer to rent rather to buy. Christopher, you have an international view. You know Iberia. You have a more European and wider view. What are the differences between Iberia and Central Europe?
Well, speaking for Corestate, obviously we're not really a provider of built to rent or rental space, but obviously, as you say, we're a German Frankfurt-based company, and we have the wider view. And what everybody knows is obviously that in Spain you have a much higher share of owned property and a much smaller rental market traditionally. And I guess the trend that we've all been perceiving is that there is a change and there is a trend towards renting space. And that trend is ongoing. And I guess it can be seen in the huge development pipeline. It can be seen also in the appreciation of banks of the market, that there is an increasing number of build-to-rent products coming up. And obviously, we ourselves are following that trend basically in our niche of managed living space, which we'll get into later. So I think it's definitely a perceivable trend, and I think will continue. And as it has been said on the panel before, is, as other trends, one of those that has been picking up speed now and has been is more dynamic as a consequence of the COVID pandemic.
Pedro, Silveira has one of the largest residential pipelines in Lisbon City. Were you already attracted by investors to produce build to rent? And in what way this pandemic changed the homes you are building?
Yes, we have been addressed by not that many, but about, let's say, 4 or 5 institutional investors, let's say with the profile of pension funds, to buy early into our developments and then rent. But the numbers that they were looking for were not attractive to us. We felt that, I mean, there was obviously, some advantage in selling off plan and in that way reduce our risk in the development. But on the other side, the kind of discounts that they needed to make their yields possible at the rental level that they could rent those units, we felt that those discounts were not, it was a very high price to pay to lower what we felt was not such a high risk, because we do believe that the units will sell anyway, and we still continue to believe that. As you probably know, because you're one of the biggest suppliers of statistics in Portugal, Lisbon is a market of about 10,000 units per year in the last 20 years average, with the lowest year at about 5,700 units sold and the highest year at about 13,200 units sold. And, the average construction of new units per year, and I wrote that down before we started, is 733. So it is so difficult to approve things in Lisbon that supply is very constrained, and the demand is out there. And we still think it's better to sell to the end user than to somebody who wants to rent and still get a 3 or 3.5% yield out of the unit. So that market, I don't think, has been that successful. It probably is less than 1% of all the units sold in Lisbon. People who are buying, or institutions who are buying specifically to rent. From the perspective of people who are in the short-term, rental business, Airbnbs, well, yes, that has been quite a strong market, as you know, but that has been more for cheaper and rehabilitated kind of units in the old historic center of Lisbon. I mean, they don't go after so much new buildings, which are more expensive and usually located in other areas of town.
David Martínez, AEDAS is one of the biggest residential Spanish developers. You are listed in the stock exchange. What is the reality for you about these things of residential, and trying to pick up a new topic? What most changed in your strategy over the last year?
Regarding the build to rent, let me say that the pandemic has speed up trends. So now it's a clear opportunity in Spain for build to rent. Let me talk about the background. Look, in the Spanish market, the new build homes market is still very, very small, as Pedro was saying regarding Portugal too. Last year, the new build homes delivered to the market were around 60,000. While in the UK, the number is around 250, Germany 300,000, and France 400,000 in rough figures. So there is no demographical justification for such a big difference between Spain and the rest of European countries. The difference or the reason for this comes from the recession. We came out of the recession later than the rest of Europe, and when we were recovering, then the pandemic arrived. So the big problem is that the Spanish younger generations didn't have the opportunity to get onto the property ladder yet, and they didn't have time to make some savings, and so they can afford to buy an apartment. So the pandemic has segmented the market. Mid to mid-high end of the market incomes will keep buying apartments, and this is a good opportunity now, while these low-income rents, basically young generations, need to go to the rental market. And this is appearing as a good opportunity since we don't have an industry here.
I wanted to pick up something, and thanks very much for the question that came in earlier. And that was from Federico Rincon from Refinitiv. Thanks very much for that. And maybe just pick this up, first of all, with you, Jose, and also look a little bit around the general financing side, I think. But how do you believe real estate players will be impacted by international banking industry opening new branches of private equity and asset management, mainly focused on real and infrastructure assets for seeking larger yields within their portfolios? So I wanted to pick up just broadly what you were seeing in terms of the finance markets, but also, Jose, if this was something that you were picking up, really.
Financing is not an issue because the banks are living from financing. What is an issue is to select very well the good projects for promoters, the quality of the promoters, which kind of own capitals equity they will put on that project, and which segment are they asking for the financing. As already Francisco said before, there will be more tough for some segments, short renting, tourism, maybe some retail, commercial centers, shops in the neighborhood, maybe not, because there's a leasing instrument that can substitute the normal rent. and it's more easy to recover if some problem we have about the promoter and about the owner of the shops. So what we are doing is perfect normal. We are receiving a lot of promoters. They want to invest and they want to leverage their own investments, and we are analyzing one by one. We are much quicker than some municipalities with the license, so they can know what they can count on us or not. And even so, some of them want sub-financing for the land and for the to construct, and that's a mixed, and we have to analyze all the project and all the leverage between the different phases of that. So that I believe there will not be an issue. More selected, more equity, and depend the segment. About mortgage and about individuals, I'm not sure, like Pedro said, that there will be a big issue of individuals who will not pay their own mortgage. The banks has already experienced from some years ago how to manage individuals. And we really, in our bank, we are not really worried about the individuals, because what it depends is how the companies and how the money is going to come from the European Community will support or not the companies, because the companies support the people and the people support the jobs, and what will be the level of unemployment. So, and for the statistics in December and maybe in January is going to be out, the banks still are growing their financing on mortgages on individuals. So I will not be very, very worried about the financing. Always there will be NPLs portfolios in the market. It comes from the last years. I've been in the meeting also for NPLs last week, and the market is still looking more opportunistic, of course, because with the times NPLs is short-term business. But what we think is that will be portfolios, but not from eventually from this year people, because the process will take some time. So maybe in the last quarter or in the last 3 months and next year we can have a broad view about the market. About the questions that have been issued, first of all, for António, I can say that the investors, foreign investors, and even the Portuguese, are looking for land for build to rent. But it's true what Pedro said, that the counts, what they want, the return that they want, it doesn't fix very well with the value of the actual value of those lands. So we had some buyers for that last year. They were happy. But this year, what we feel is they look for pandemic and want price of pandemics. And the promoters, if they are promoters, they know that the project is not for 1 year. And we hope that during 2021, everything will be much more controlled with the vaccines and with the pandemic. So really promoters, they are investing. They are looking, but they are not only looking for multi-family and build to rent. They are also looking for piece of land to their own, to make houses, individual houses, because what we saw also, and around the big cities, not in the big cities, because the prices are lower. The big cities have the luxuries, and the offices have been the market for buildings and so on. Is very thin now. Because a lot of things in center of Lisbon, Porto, Braga, and everybody, other cities have been bought and rebuilt. So what they are looking, those investors, is also a piece of land to make vivendas and to people to live as a family with more safety. And that's what the investors are looking more in Amadora, in Miraflores, in Famalicão, in Maia. So it's what I can say about that.
Let me come back to David Martínez and Pedro about this theme of financing, because AEDAS is moving from traditional bank financing to the emissions of bonds and green bonds. So my question, David, is that if the bond market for developers such like AEDAS is an option?
We have issued a commercial paper, and this is working really well. And we are considering to issue a bond sometime down the road this year. And as of today, the market is at a very good shape. We're doing so because retail banks in Spain are providing more difficulties to keep financing developments. But it will be a complementary source of financing. So we will keep with the retail banks, commercial paper, bonds, and possibly alternative financing. We are already studying different possibilities to keep sourcing our developments with direct lenders too.
Pedro, you were saying that bank financing is now tight. Are you looking to alternative ways to finance? Bond market, green bonds can be an alternative?
I wouldn't say that banking is tight. I would say that they have become more prudent, which I guess is understandable under the current circumstances. And like José said, they're going to be more selective and ask for a bit more equity. We've definitely experienced that in the last 12 months. We are looking at different kinds of financing. One is through an investor that will do a pre-buy of apartments at a large discount. And, we will have a call on those apartments. So if we can resell them, we have to pay that investor, his profit, but we can still make our profit. Another way we're looking at it is to start a real estate fund that will sell units to lend to developers. And it will have a mortgage and it will pay a good interest rate, 3%, which is, pretty much what most other open-ended real estate funds are paying anyway. And finally, we are looking at sort of, let's say, call it partnerships with a preferred dividend pay. Those are the three alternatives that we're looking at. One of them we have actually already implemented. The other two are in the pipeline. But I still think that, the banks are our best partners, to tell you the truth.
I'm going to come to you in a moment, Álvaro, because there's some interesting things there. But Christopher, I didn't know if you wanted to pick up just particularly on that financing point.
We're basically a bit the odd one out here, probably in this group, because we're not really in the residential rental market, but we are rather a micro living manager, which is about 25% of Corestate's business across Europe. And obviously, as an asset manager with 26 billion assets under management, on a corporate level, we have actually looked at various ways. We have various vehicles and various ways of financing our projects. So we do have open-ended funds, we have closed-ended funds, and all that kind of stuff. We're in processes of actually recapitalizing part of portfolios in order to seek joint ventures with institutional investors, as we see that our segment of the market is getting more and more institutionalized. And also I have to say, particularly in Spain, I find it interesting that we are finding financing from banks, project financing. And I do even have the sensation that they are more interested in our product than they are in some of the residential product. When it comes to student housing in particular, we've very recently financed with banks, with debt funds on levels which are maybe 50 to 100 basis points below in terms of LTV of what we've seen before a crisis, but that is not really so dramatic. And still, The margins are very humane. So I think, the market for us is still very accessible. And I have the feeling that they're very much looking at a asset by asset basis, and obviously they're being more prudent. But in general, from banks to institutional money, funds are available. I think the ones that are a bit more prudent right now are private investors. We used to deal a lot with family offices and clubs and that kind of stuff, and they're probably a bit more prudent because some of them also have been hit in this crisis on other ends. So they're really looking at the investments very, very, very thoroughly.
Okay, great, thanks. And Rita, thanks very much for your question, and I'm going to come to that in a second. I just wanted to pick up with you, Álvaro, if I can. Pick up on anything in that discussion around financing or those other aspects that you want to pick out. But also just in terms of things like the lease law in Portugal and Spain, how friendly are they, do you think, in terms of sustaining long-term a successful market? Do you think there's changes that need to be made there? What's your sense of that?
Thank you, Richard. So I think that, as one of our colleagues mentioned before, we cannot make a single statement about Spain and Portugal. So there are some common trends regarding protecting the tenants, which in Spain were more focused on residential tenants. When I say in Portugal, also affected commercial leases, not so recently, in the early 2019. But overall, I think that we are quite friendly markets for the owners from a tenant perspective. The question mark is whether we are going to be still friendly in the next times due to the trends in protecting residential leases from market conditions, the rent control that we are hearing about. The thing is that what we see is that the only region where actual rent control has been set up is Catalonia, and in that specific case, the expectation is that the Constitutional Court will annul the specific provision because they have already signed in that direction in a recent judgment. And in a more nationwide level in Spain, it seems that they are dropping the issue. Let's see how it goes. But most recent news is that they are dropping the issue. So the only concern here, and I think that our Portuguese colleagues also share the feeling. So I am going to use a Galician song, which is Ondinhas Veñen e Van, which is waves come and go. And this is quite the sense that some investors may have felt. In Spain, we had Urban Lease Act for 30 years. Then what we called the new Lease Act was in 1995 for again 25 years without more or less no changes. And suddenly things going crazy, and we somehow managed to unfocus and perhaps to create some uncertainty in investors. In Portugal, happened more or less the same. There were successive amendments of the Portuguese law in 2012, 2014, and again 2019. So I think that this is something that I would like to avoid if I were an investor, that the rules keep changing.
Yeah, that's interesting. I'm just going to come to Rita's question, and this is for anybody who wants to come in on it. So thank you. That's Rita Xavier de Brito. Will there be a shift of real estate investment from Iberia to other countries, especially considering that the pandemic has particularly hit Spain and Portugal, and the GDP of these countries has fallen more than other countries? And that's interesting, because that's a question that's been coming up actually quite a lot in the sessions we've doing, focused on France, Germany, the Netherlands, other areas. That sort of point around how is investment going to be implicated by the way that countries have dealt with the crisis. Christopher, you put your hand up, so I'll come to you.
Yes. Okay, thank you. Yeah, I think I have a few appreciation and a few ideas in that respect. First of all, obviously, the type of the question ties in with what someone said before. It's not Iberia. It's Spain and it's Portugal. It's really two countries that need to be considered as separate entities. And I think especially in that context, because you are talking about two different economies and obviously two different scales of economies. Portugal being a much smaller economy. And with all my appreciation that I have for everything that Portugal has done at post-global financial crisis, obviously it's a much more feeble entity just for sheer volume and size, right? And the other thing is that obviously Spain, having been hit so hard in the first period of the pandemic just 1 year ago, the general idea is that Spain is really dreadful, and it isn't. I'm currently in Germany for this week, and I can tell you the life in Frankfurt is much harder than it is in Madrid right now. And restaurants have been open since last May, shops have been open since last May, which is not the case in Germany since, I believe, October, November, meaning there's a bit of an ongoing economy there. Obviously, not consumer spending is not that happy as it was before, but there's an ongoing sustained economy that is ongoing, and that I think that will prevent Spain from, taking a very deep dive. But there's another parallel factor I think that we need to consider, and that's probably not only the case in Spain and Germany, but other countries, although I'm not really aware of that so much, and that is the subsidized short-term labor that the governments are actually sustaining and have been sustaining for quite a while, and which is actually keeping an artificial level of labor force at work and keeping unemployment numbers fairly stable. And that is going to expire at one time or another, and that is going to be a trigger, I think, for us for an economic, I don't want to say crash, but a downswing. And that's the same in Germany as it will be in Spain. And then the question is really how resilient are those economies, and how much do the current measures actually, sustain the level that they have, and how deep will that impact be? I think that is really important. And then coming to the real answer, I think, if you look at these fundamentals, investments shouldn't be turning away from Spain or from Iberia, if you want to see it as a context. I think both these markets are keeping interesting, have a lot of potential. It's also what we're observing, that we find a huge interest for investments in Spain, at least. Institutional money is coming our way, and really, really interested. And seeing the opportunities, obviously, because Spain was sort of in a build-up, and it's been a bit of a plateau and maybe a dip, but it's going to recover, and I think that's a general appreciation. Portugal, I'm a bit more wary, and we'll probably have to observe, but just merely for the fact that it's a smaller economy, it's probably going to be a bit more difficult to recover as quickly.
I can speak about Portugal a little bit. We are not so pessimists. It depends, because our economy, the figures didn't low so much as it was previous. The unemployment also. So some fundamentals, if the economy opens, if the foreigners come again, don't forget that different from product is from long time ago. We did recover a little bit, but the difference is still there, and we are going to receive, like other countries, quite amount of money to put it on the economy. What worries me a little bit is that most of the projects from the money for the Recover and Rely project that is now in discuss publicly is more for the state investors than for private investors, and that could have some constraints this year on the recover side of some sectors, because some sectors are supported by private investors, and with the end of the moratorias, we have to have some solutions for that. But with the people, with the weather, with the food, if the people stay safe to travel after the pandemic, Portugal will recover again from different sectors for the economy, for sure. We know it's the niche market, always has been a niche market for investors. But what we feel for the moment is that they are still looking for good opportunities. And the prices still are very low compared with some other prices. And even if the product was not so hard hitting on some other countries, they have been also very hard eating about the pandemic. France, Italy, Germany, France, England, they are not, there's the Brexit is also a effect for the investors for real estate in England. So we are happy to see, and we are confident that Portugal, maybe if they stop a little bit in 2022, will restart again with some good opportunities.
Yes. Pandemic was not only about Southern Europe; it was all over, and that makes a huge difference. One question is how this pandemic is changing the way we build homes, and are we adapting in some way, perhaps going in the Corestate way to make more favorable contexts for micro living, for these new kind of concepts. So I will come to you, Christopher. Do you believe that this pandemic favored your kind of offer? And then I will go to David and Pedro to ask if they are looking to change something on their future projects.
Right. Well, thank you. I'm not so sure that the pandemic in itself is favoring our product. I think the general speeding up of developments that were imminent obviously is working towards us, right? Because there was a trend obviously of an increasing interest on the consumer, on the resident side, as well as on the investor side, in managed housing. So student housing being the prime example that has picked up very, very quickly. And obviously in that context, people have seen that the concept of managed housing is very interesting. Then there was the next trend was the co-living, which sort of started out as a hip urban nomads sort of thing. And I think it's becoming much more broadly applied as a residential concept. And then we're going into the senior housing. So there's all those niches. And what I think favors us is as an expert manager and a market leader in that segment is that there's the general trend. This general trend is speeding up. And we are looking at all those niches and seeing how we can actually expand into those niches in each market. I think that's sort of working in our favor. And in terms of product, obviously, there is, I guess, an increased appreciation of the importance of catering to individual needs, keeping the health and safety standards up, providing maybe that co-living, whatever, but guaranteeing the intimacy and the privacy to each one in order to protect his environment and to stay safe within the wider scope of a community. And that sort of is an operative challenge, which actually we had already been anticipating because we always believed in that concept of providing intimacy as well as community. But that is, I think, where the challenge to our community in general is, and to the product, where it will evolve more quickly again.
Okay, perfect. David, are you seeing any changes on future projects of AEDAS and looking to these niche segments?
Yes, Antonio. Look, the pandemic made homes priority one for many families. So what we are seeing now is a shift from multifamily to single family, detached or semi-detached. This is more or less 10%. Before the pandemic, according to our production, 80% of the developments were multifamily and 20% single family, and now it's more 70-30. People are basically looking for more space for terraces and for yards. So this is a clear trend.
Okay, Pedro, are you looking to make some change in your development pipeline to go to these niche segments, or business as usual?
Mostly business as usual, Antonio. Look, we are always afraid of jumping to conclusions very fast. We've been around since 1952. You know, we've lasted or overcome 7, let's say, market crisis. And, you know, real estate in Portugal in terms of planning is a very slow and cumbersome business. So if you want to go and change a loteamento, you know, that's going to be, which loteamento is an allotment, sorry, in English, you know, that's going to take about 3 to 5 years. And if you weigh the advantages of doing that and, you know, the costs of holding to that land and the risks of holding to that land for that extra long period, it probably doesn't pay off. Yeah. Now, inside the units, in terms of architecture, yes, we will adapt. I mean, you know, people are, I mean, I think everybody will agree that there is an acceptance that people are living more their homes now than before. Before they were more overnighting on their homes, let's say, and living outside. You know, but we are always evolving in architecture. Every project that we do, which, you know, has like, you know, Hütwohl, for example, 1,600 units, or in Monteverde now 355 units, or Alcântara 200 units. When we do the first phase of that project, we always sit down with the first buyers. We take them out for lunch and we speak to them. I mean, literally, we have a team that interviews every single housewife and every single husband, and even the kids. And we try to learn from them how that house could be better. And it's amazing how we learn. And then we work with our architects. And then the second generation of that product, you know, the second 50 apartments or the second 100 apartments that we build on it, we always introduce those improvements. So that is already built into our DNA. Some big changes that we, you know, probably are likely to notice is that people are definitely giving more importance to being able to work at home. And people are also giving more importance to outdoor space. So, I mean, I agree with what David said. Those that can maybe now are more attracted by single house rather than, you know, apartments. But not everybody can do that change for economic reasons. In fact, if we're going through a crisis, to some extent, people's budgets are even more tight. So I would say, you know, another trend that might happen in the future is commuting distance. If we all agree that people are maybe only going to come to the office 3 times a week rather than 5 times a week or 2 times a week, then they will, in our opinion, be more likely to sacrifice longer commuting time, those 2 or 3 days, because they will be doing that trip less times a week, for a cheaper house further away and a bigger house with more amenities, with more garden, more space, in a more open community rather than in the urban center, which was what people tended to do before, to be able to not waste so much time traveling to job. But you know, we can't respond to those new, let's say, perceptions automatically. Our industry, you know, the time to market of our products is 3 to 5 years between buying land, you know, concepting, doing the design, getting it approved, and building it. So I think that, you know, that will probably happen, but I rather wait and see if it really does before I put my money on it, than start, you know, making new experiments straight away.
Okay.
Just a small remark about it. I agreed with Pedro, but as the other Pedro on the first panel said, still confused about the offices and about. But what I can confirm is for single houses, looking for plots for single houses, our clients are looking for the moment a lot, and we are selling much more during 2020 and the first month of 2020 of those kind of plots. And the greenhouses, green sustainability, green promoters is an issue in Portugal now, because the European Community is pushing hard, and our government also is pushing hard. And the only small helps that we have now in discussion also for the private sector will be in these greenhouses on the future and green recover on the future. And Secretary of State has been in an interview with the Machado platform that confirmed that they are prepared to help the private sector in that area. So that's the future also.
Yeah, I think that's a really interesting point. I mean, that's something that we've picked up a lot in all of the interviews and all of the discussions that we've been having, that sort of growing focus on ESG, sustainability, lower carbon, but also impact investment and purpose-driven investment. Álvaro, is that something that you're seeing as a trend? Often there's discussion around trends that are being accelerated by that. Is that clearly the case also for Portugal and Spain?
Absolutely, and in all levels. So we have clients with dedicated ESG or impact, social impact investments, which are quite, of course, particular and specific in their needs when analyzing a certain property or a certain project in ways that we did not take into account like 2 years ago. Suddenly there are things that are important that weren't at that time. And regarding asset management, of course, we are mandated to include, but also to enforce, and not only to include to make the check in the box, but also to make it happen. ESG and sustainability clauses in all leases and even in addenda to leases already signed, to get for the owner to get the information, the control, and also the opportunity to to propose improvements in the properties to the tenants in the aim of making more sustainable products or reshaping existing products to make it more ESG friendly. So yeah, absolutely, an absolute trend.
Okay, good. Good and interesting question came through from the RealX platform from Rafael Pelot. Thanks very much for that, Rafael from Sierra Development Services. I'd like to hear the opinion of the panel, especially the residential developers, about the prospects of the end of the negative interest rate cycle on the demand, especially on the cost-driven segments, and is this going to affect investment? So I don't know whether that from the point of view of any of the developers there, whether or not there's a sense of what's going to happen in terms of the interest rate cycle and what the potential might be to impact investment in your businesses, particularly, or in that sector.
Higher interest rates usually, obviously, hurt our industry, and in residential, in Portugal, that is quite true, given that 90% or plus probably of all the houses sold are done with loans from banks. And if people have to pay more for their loans, then, they can leverage their wage less, and therefore they have less money to spend. So, the answer is yes. What is more difficult to say is how much it will be affected and when that will happen. On the other side, I don't know about this, and I would ask José Araújo to help me, but most situations I know of new loans today, or let's say, since we've had negative interest rates, the banks are putting a clause in the contracts by which the spread is above zero. So the old contracts, people did get a ride on let's say the negative interest rate, but on the new contracts signed in the last 2 or 3 years, to the best of my knowledge, nobody is getting that right for free. And, so to some extent, we've already adapted to no interest rates being negative for all the houses that were built and sold in the last 2 or 3 years. So I'm not afraid so much of the negative to positive interest rate. I'm more afraid of the positive +1 to maybe +5. But then your guess is as good as mine on that.
Yeah, I can confirm what Pedro is saying. We have a floor, and there's no negative for new loans for promoters or for individuals. So, what we are dealing is the old contract that we have to return some of the money because there is negative the spread. So it's like that. The impact will not be very hard, only if the inflection will come and will start. Some studies in Europe said that the inflection could come in the next years. We don't feel in our bank for the next years that those kind of issues will impact a lot in the market. We would like on the banking system that the rates will come again positive, because the banks are not getting money from deposits from the passive side. They almost get money on the other side of the loan side, and the banks will like to manage both sides. That's why we have a bank to manage. But we don't feel it that those impacts in the next 2-3 years. It's I believe so.
Okay, and David, you wanted to come in on this.
Yeah, I don't see if we will see inflation in the near term or even the midterm, but I'm pretty sure that the interest rates won't grow up significantly. So 1%, 1.5% won't change the decision of the buyer to acquire an apartment. I think that we have a very strong demand as of today here in Spain, and this is being, regardless or despite the pandemic, it remains strong, and we have a big opportunity there for the younger generations to invest in the housing, whether if it's for buying the apartment or renting them. So honestly, I don't see this as a threat in the mid to long term.
There's obviously been moving up investor intentions, a lot of a focus around healthcare, around senior living, those kinds of things. Is that a growth area potentially within that residential space in a way for Spain and Portugal? Does anybody see that as a major growth area, particularly that senior living side?
Obviously, that falls a little bit into our niche here of managed housing. It is one of the niches within the micro living sector that we are looking at and analyzing currently. What I'm really seeing is that there's money coming into the sector of senior housing. Everybody's looking at that, and obviously Spain is a particularly interesting market here. So I think, yes, there is a movement, and again, is one that is speeding up. I think what is interesting that it's basically, when you're looking at that conceptually, you're basically tailor-making space for individual reference groups, and that was students to begin with, and then you have the young professionals, and we have the service apartment, which are catering to business travelers, which right now is being a bit questioned because nobody knows when business travel is going to be back to where it was. And then obviously you do have that elder generations, and I think what is really a bit of a maybe signs of our times and things we've been observing for the last decades, and my generation coming of that age now is that we all have this desire to find something that is a bit more made for our needs, rather than spending quality time in each of the decades of our lives. And I think that is where the office, the service provider, really, if the offer is right, has a market. And it very much comes down to analyzing the market and matching a product to that market and catering to those needs and making it very specific. And then you're really getting into a field where it really requires operational expertise to getting that and making it profitable as well, because it's not an easy business actually to really make money on the long haul.
Yeah, it was what I'm going to confirm. In the last 2 years, Portugal, with the weather and with the conditions they have, the senior living was already a target for some investors. The problem is it's a long process, because there's strictly rules to have senior living houses, and the return is not so quick than houses to sell or even to rent. So it's a tendency, but it's not so strong that everyone is coming here. Maybe also the market from short-term recover for people from other countries, because we saw also on the health side some projects to people to stay not a long time, a short-term recover and go back for your countries because of the climate, because of the hospital system and so on. But it's not strong.
This is the EU next generation funds, and the very ambitious targets for decarbonization, and the huge amount that there is to make the rehabilitation of our cities. And real estate is by the first time, by reinforcement, provided with funds from EU directly to the real estate sector. So what can we expect from this huge amount of money coming to real estate towards sustainability, decarbonization, and mainly rehabilitation of our cities? And on what extent developers like AEDAS or Grupo can look for that opportunity? Álvaro, you are aware of the EU funds. Do you want to say a few first words?
It's, of course, a great opportunity. So what reality has shown is that the rules are not being applied, in the sense that the EU regulations are quite challenging, in the sense that they are imposing zero carbon and certain regulations for the new developments, but they are not being enforced by the national governments in reality. We've got a question from one of our CEE partners looking for the reality in the other offices of CMS, because the government was taking for their too seriously the EU regulations around the energy efficiency, because now with the state of the art, it's really difficult to create a product with so higher standards. On the other hand, if now with this new source of funds, there is a carrot strategy in really making this economically viable, we may see redevelopment or reshaping of existing buildings in the central of the cities that could create a real impact. So we in Spain, we had really strong hard snows in the early of the year, and the lack of adaptation of the heating systems of the buildings made a side effect really concerning levels of pollution in the central of Madrid and other cities in Spain. This is something that can and should change for the best, and hopefully these funds, if they are well oriented, may be a good opportunity to get to this goal.
Perfect. David, what this is changing in your AEDAS plans to go through a more sustainable construction?
I think this is a good opportunity for developers to start working inside the cities, in the inner parts of the cities. Look, Spain has grown in the last century in terms of the city sprawl like an oil drop. It was cheap and easier to extend the city. But this is not sustainable anymore. This is expensive now, and it has a lot of stakeholders against it. So maybe it's the right time now to start working inside the cities, using the money coming from the EU. This will change also the way we develop. We will need to establish public and private partnerships, but clearly it's an opportunity. London established the green belt at the 40s, if I am not wrong, protecting the city of London from an urban sprawl, and the market responded well. So there is a clear trend to this direction, and I think it's a good opportunity for us out there. It's not going to be easy because the regulations are difficult. Working with the administration is a nightmare, but the society is pointing out into this direction. So yeah, it's an opportunity.
In our office development, we already felt from years ago companies demanding for certain levels of sustainability in the premises they were going to occupy as a company policy. And we are increasingly seeing that not, let's say, demands, but preference from private individuals buying homes. Definitely, I think that, you know, all of us need to take that very seriously. People are conscious, particularly the younger buyers, more so than the elderly. And I think it's the right thing to do, you know, from a humanity point of view. And if we're being helped by the governments with subsidies, then we should take every opportunity to grab, you know, as much as we can of that to improve and make the houses as more carbon free as possible. So, you know, everything we build now is BREEAM good. And, you know, we might raise the standards. At the moment, given the Portuguese, let's say, purchasing power capacity, above BREEAM good is a little bit expensive for us to build and to put it out there. But, you know, in certain developments where, you know, it's more premium kind of housing, we will probably go higher than BREEAM good in our sustainability standards.
I just wanted to just give everybody kind of 15-20 seconds on where they see the opportunities, just as a kind of roundup to this one. Christopher, let's start with you. Biggest opportunities for 2021 and going forward?
Well, definitely it's micro living and looking at the trends that we've seen. And obviously, one aspect we're very much looking at is affordability. I'm not saying affordable housing, but accessibility in terms of pricing in order to really make it a mass product.
Interesting. Yeah, that affordability one is quite an interesting topic, I think. Jose?
I believe, yeah, private houses. Yes, private houses with a garden, with a piece of land, and looking for good quality life nearby, not with cars passing by, but with bicycles and so on for the future children can, with parks and so on.
You paint a lovely image, Jose. Thank you. David?
Basically, build to sell apartments for mid to mid-high incomes, affordable housing for the younger generation. Sooner or later, there is an unreleased demand out there, and build to rent. It's an opportunity also.
Okay, great. Álvaro?
Not to repeat what everybody is saying, a big question mark in hotels. And I agree mostly with the other products that I have heard.
Okay, super. And last to you, Pedro.
I would perhaps start looking at some offices to convert into residential in some parts of town.
Interesting. Okay, great, good. Thanks very much to everybody here for joining us. Really interesting to get that outlook on the Iberian markets, I think.